Hey, what's up, everybody? This is your host, Holizwe, and in case you're new to this channel, welcome. Yes, warm welcomes once again. It's been a long time since I have posted something, or rather a video that I can react with you guys at this level. Normally, I'll post, I think for the past weeks, I've posted a video of I think one or two videos of myself playing piano with my friends. We had a bit of a jam session. I was playing piano. I had one friend of mine playing bass. I had one other friend of mine playing the drums. So you can just check out those videos, and you can rate me out of 10. How good are we with the team? Not just me, but with my team. Obviously, we all beginners in terms of, I just recently learned how to play the piano. You can just rate me out of 10. Tell me what you think of my playing. And I've also posted a video of myself hosting a Zoom call meeting with some of my students, where we normally will talk ideas with regards to some of the asset classes that we'll be trading, whether it's the Euro US dollar, whether it's the NASDAQ 100, which is mainly in South Africa. It's something that everybody is talking about, and I probably might have my upcoming videos on NASDAQ. I'll see if I can give one beautiful video on NASDAQ. But anyways, today I'm going to be giving you a video, assuming that you are already into Forex trading, or you have just heard about Forex trading, or you have some interest about Forex trading. So yeah, today I'm just going to be sharing stuff that will help you not to blow your trading account. If you're new to this thing and you're like, what on earth is this guy talking about? What is not blowing my trading account or your trading account? Well, in trading, we often use the word blow. Let's use an example. Let's say one funds his or her trading account worth of $1,000 US, and you take a few trades, let's say 2 or 3 trades, and you obviously lose everything. Let's say you just don't have any luck with your trading, you just lose everything. That we normally call that blowing your trading account. We don't often say you lost everything that you had. We just said you blew your account. So that's the terminology that you'll notice traders use too often. Now, it's not something that's nice talking about, but it's something that really happens in the industry that we are in. Remember that we have about $6 trillion that is being traded, or rather the turnover in the financial markets. We have about $6 trillion. Now, that is massive. And, last year, because of the coronavirus, we have, from last year till now, we have had more people jump into the financial market because of the pandemic. They have realized that there's no security in their job, so they're looking for some other alternative. And, online people have been, mentioning Forex and, probably e-commerce and many of those things that people can actually work on and control their finances, and Forex trading is just one of those vehicles, I might say. And because of that, more people are jumping into the financial market. But the truth is, or rather the greatest fact is, out of 100% people that are trading, 90% of them lose money. You heard me, I said 90% of those traders lose money, or they blow they blow their accounts, meaning they take a few trades and they lose everything. They just lose everything. And that is the sad reality. It's the sad reality, but it's something that is happening. As I'm speaking now, somebody's crying. Somebody has put their hard-earned salary into their Forex broker and they have lost everything. Now, I'm not talking about people that give money to some investment people and then have their money, grow legs and run away. No, I'm talking about people that actually found their trading accounts. They look for a broker, they put money into that trading account, they place a few trades, maybe they buy euro dollar, they sell euro dollar, and then they lose money. Those are the people I'm addressing to right now. So this video is gonna help you not to find yourself in that situation. So number one, assuming you have funded your trading account, assuming you already know how to buy, you already know how to sell, right? One of the things that you have to take to serious consideration is, when you are trading, For every trade that you take, you want to risk 1%, maximum 2%. If you want to go a bit more, aggressive, 3%, not more than that. Guys, I want to say this again. You want to risk 1% as a beginner trader. As you get more experience, you might find yourself risking 2%. Now, that's normally what I normally risk when I take a trade. So per trade, I risk 2%. But if you're new, I'll advise you to actually risk 1% per trade. 1%. Not 5, not 10, not 15, not 30, definitely not 50. You want to risk 1. Now just comment below and just comment the word 1. 1%. Say 1%. You want to risk 1%, guys, because if you think of it this way, let's say I have 100,000, whether in dollar or rands, let's use the word dollar. Let's use the dollar because it's something everybody's interested in. So let's say I have 100,000 US dollars into my trading, funded in my trading account. If I take a trade, I should be willing to lose 1% per trade. Now 10% of 100,000 will be 10,000, right? So let's say I risk 10% per trade. It will take me 10 trades to be in a position where I blow up my account. If I take 10 trades and all of them are at a losing streak, then I will blow my account because I won't have more money to place trades, because I'll take the first trade minus 10,000, the second trade minus 10,000, up until the 10th trade minus another 10,000, altogether minus 100,000, and that's all I had in my account. So I've blown my trading account. So you want to find yourself in a position where you have more trades, you can take more trades, even if you even if you lose 10 of those trades, you still want to find yourself in the game. You want to find yourself in the game. Now, often I say to my students, and I use this a lot, guys, you probably have heard it in my previous videos, you'll probably hear this again in my upcoming videos. I often say, we as Forex traders, we as trade analysts, we are nothing more than just being medical practitioners. A doctor will receive his or her patients into the hospital or into his practice. Now that patient obviously is there because they are unwell. Let's just go a bit more extreme. That patient is there because they are about to lose their lives. And the doctor, when receiving this patient, the doctor does not say, I'm gonna give them life. That's not what the doctor says. The doctor says, you know what? This guy is here, this patient is here, they need my help. I can't give them life. What I can do is to help maintain. That's the word, guys. Maintain. To help maintain the life that this patient already has. I'm just going to help maintain his life in the hope that as I do what I do best, which is to help them maintain life, as I do that good, the immune system of the patient will probably come alive, and the immune system, the body soldiers will work on producing life or giving life or, whatever it is to getting the patient to come up. And as a trader, we are also in that same business. The patient is the money you put into your trading account. Do you understand what I'm saying to you? Or rather, the patient is your trading account. Once you fund your account, the broker being your hospital or your practice, the account that you hold being your patient. Our work is not to add more life, which is money. We'd love that to happen, don't we? We'd love that to happen. I'd love that to happen, but that's not our work. Our job, guys, is not anything less than just being helping to maintain the account, the life that the patient, the trading account has. That is our job, to help maintain the life. We're not there to give more money to the account. We're not there to get more money into the account. Obviously, that is the end result. We'd love for that to happen, but that's not our responsibility. Our responsibility is to be able to maintain the trading accounts that we have. That is our responsibility, to maintain. That's the word, maintain the money in the account, not to lose money. So if you're risking 1%, if you lose that trade, you're not going to lose more. You're just going to lose, close to nothing. It will take you 100 losses to find yourself, not even 100. We need to get the maths right. No, we're talking about risking. If you're risking 10%, you're going to lose. And if 10 trades go at a loss, you have lost everything. But if you're going to be risking 1%, which is $1,000 US, remember back to the example, it will take you 100 trades, which is highly not possible. Guys, it's not possible to lose 100 trades, even if you're not a good trader. You can just be randomly placing trades, buy, sell, buy, sell. You're not going to lose 100 times, So that means if you're risking 1%, you still have game power to be in the game. You still can be in the game, and that is the whole. And that is why I normally tell people risk 1%, because you have much more shots to throw the punch, even if many punches are thrown back at you. So even if things don't go well, you still can stay in the game. So that's the first thing, guys. You want to risk 1% per trade that you take, or maybe maximum 2%. If you go 3, you should. I wouldn't advise that. Just 1%, 2% maximum is what you should be willing to lose when you trade. Number 2. I wasn't even thinking to giving numbers to this, but number 1, you want to risk 1, maximum 2%. Number 2, you want to find yourself in a position where you don't trade against the trend. If you see that for the past month or the past week, we are in a bearish market, meaning the price of whatever asset class you want to be trading has been dropping down, you don't want to find yourself trading against the trend. If you're new to trading, or you probably might have heard some traders, whether on YouTube or wheresoever, you might have heard this saying, the trend is your friend. Yes, the trend is your friend. The trend is your friend. If the market is going bullish, you want to find yourself going long on most of your trading positions. If the market is going bearish, you want to find yourself going short on most of the trading positions that you take. So that's number 2. You don't want to trade against the trend. Number 3, during news events, I don't care whether you're a technical trader or you're a fundamental trader. Fundamentals are important, guys. Fundamentals are important. If something is going to happen at 2:30, whether it's going to be NFP or whatever the case might be, you have to know that the market will respond in a way that it doesn't normally respond when there are no fundamentals. So you want to be careful. You want to trade cautiously at those times. I normally will say 30 minutes prior to the news event and 30 minutes after the news, 30 minutes after the news event, you want to stay away from trading. Obviously, the more experience you get, you find your tune, if I might say, in terms of trading those news events. But if you're new to trading, I'll recommend you don't trade before 30 minutes prior to the news event and 30 minutes after the news event. You want to stay away from the market. Then probably 30 minutes after, you now can trade, because at that time the markets would have eased from being shocked at the news feeds on those specific major events. So I said, number 1, you want to risk 1 to 2%. Number 2, you want to follow the trend. The trend is your friend. Number 3, you always want to find yourself in a position where 30 minutes before and 30 minutes after the news event, you're not trading, especially if you're unexperienced. Now, those are 3 things that I will consider as the main important things that will help you not to blow your trading account. Blowing your trading account is not a nice experience. If you haven't, well, lucky you. It's not something you'd like to happen, especially if you have put so much of capital into your trading account. All right, so guys, I think that's it. I will be sharing more with regards to this topic because this is I normally will speak an hour in my seminars or workshops, talking to some of my students or some of the people that have interest in trading. I'll normally speak for an hour about this topic. So this is a large topic, guys, but I'd like you to just digest what I've shared with you. Again, number one, you want to risk 1%, maximum 2% per trade. Number two, never trade against the trend, because the trend is your friend. Yes, the trend is your friend. Number three, number three. Oh God. Number three, guys, you want to find yourself in a position where 30 minutes prior the news and 30 minutes after the news, I almost forgot that one, you don't want to be trading, especially if you're new into trading. So you never trade before the news, you never trade after the news. You just trade after everything has settled. When the shock has been dealt with, then you can jump into trading. If you love the video, guys, please do click the like button. If you haven't subscribed to the channel, please do, because I'll be sharing beautiful and amazing content. You will truly love it, guys. You'll truly love it, because I'll be giving trading suggestions. I'll be giving some of the business tips that have worked for me. I'll also be telling you what hasn't worked for me, because as much as what has worked for me is important, maybe what hasn't worked for me is important, because you can just probably see why not to jump into that. But obviously what I'm sharing here with you is not by any means, and this is a disclaimer, this is not some investing tips. I'm not a professional financial advisor. I'm just here talking about what has worked for me and what is currently working for me. So guys, if you like the video, click the like button. If you haven't subscribed, please subscribe. And if you know of anyone that probably might get some help from this channel, please do share the video. Please do just click the share button, give it to them, and let them be blessed. Till the next video, till I pitch up again on the next video. I don't know when that will be, but I think it's gonna be sooner than ever. What's the word? I should have had a script for what I'm talking about today. It would have made my work much easier. But guys, till my next video, cheers guys. Love you all. Bye.